What's up, guys? Ego Complex Crypto Cauldron. Today's video is going to be a little bit different. Today's video is going to be about the Death Cross, and it's specifically the relationship it has in the crypto space, because this has been around from the stock markets for a long time, and it's linked directly to stock market crashes. What does that mean for the crypto space, and how has it affected us in the past? These are important things to know. Before I get into it, please look at the description. The link to our trading group Discord is there. Use the promo code LAUNCH75, $5 to get in for a month. I think you'll love the group. Over 120 people have joined in the last 5 days. So let's get into this. Rekt Capital published this chart. There are multiple charts on TradingView under ideas you can look at, basically tracking and predicting based on past indicators of drops. Okay, this is not meant to scare you. This is data based on past death crosses in the crypto space. There have been 5 or 6 in the history of crypto. Okay, so he has the death cross occurring June 17th, which is Thursday. This was published May 31st. That may not be super accurate. It may be accurate, but it may be a day or two off. The reason being, moving averages are affected by the price, right? And since Sunday, we've had a mega pump in Bitcoin price. So there may be a little bit delay to this, but it is important to see these levels. So death crosses, that is the 50 moving average moving through and in downward fashion, the 200 moving average, right? And specifically, we're looking at the daily. When that occurs, just like in stock markets, this has occurred in the crypto space. Now, there's a few key points to make in the crypto space. Point number one, how it affects the price is highly and widely varied. Okay, so we've had -6% negative effect on price all the way to -71%. So you need to understand that it's a vast range of price declination, -6% to -71%. Point two, we don't know how much of the price declination is already priced into the existing market. Bitcoin is trading off of its highs by roughly a third, right? We're trading around 40K. Bitcoin was at its high above 60. So we don't know how much of that's priced in. Nobody knows. All you can do is look at history, okay? And then point three, this specific chart is focusing on the larger numbers that have occurred after a death cross in the crypto space. So don't let this scare you. This is data that is available. You can go back and look for it yourself. And this is data of actual events that happen in the crypto space. Not my opinion, not pushing a narrative here. This is for awareness. So look at this. So you have, in the worst case scenario, again, remember that range is 6% to 71%. You have a 55% decline in price. Again, when this chart was made, Bitcoin was roughly 37K. So it's pretty close. We're trading at 40K. You have a 55% decline in that first scenario there, which would bring Bitcoin to 18.2. You have a 65% decline, which would bring Bitcoin to 1493 or 1493. And then you have a 71% decline. It's 11,000 Bitcoin right there. Okay, so keep in mind, when a death cross occurs, this is not a drop. Like tomorrow, the death cross happens, you wake up the next day, Bitcoin's down 71%. I mean, that would be easy. We could make a ton of money in the futures. But that's not what happens. Some of these price declinations were just a few days. Some of them took place over weeks. That is why it's considered an indicator of a strong bear market in Bitcoin, okay? It's an indicator. This price movement can happen over a period of weeks. It doesn't have to happen in a day. So keep that in mind. And again, this focuses on the most severe drops. That's what you're seeing here in this chart. But I wanted you to see this. You need to be aware of this. And let's go look at the actual chart for Bitcoin right now. So this is why the death cross is relevant. And this is why we're discussing it today. So you see the 50 is the cherry line above. The blue line is the 200 moving average. The death cross, again, is when that 50 crosses in a downward fashion through the 200. Right now, hyper relevant, because the 200 is the case of resistance, is a point of resistance right now for Bitcoin price. A likely scenario, if Bitcoin continues to get rejected, is Bitcoin will fall down looking for support. I have the support mapped out, 36, 38K range. So price always falls to support or seeks resistance. That's the movement of price. If it falls to support, knowing what I just showed you in that chart, this is why I want to share this with you. If it falls to support, the perfect bear storm, right? This is a perfect storm for bears, would be Bitcoin falls back to support. You have a death cross. Even, just think about this, even at 20% or 10%, let's take the low range, let's take 10%. If we're sitting at 38K for support, you have a 10% decrease in price, gradual decrease in price. That's 3,800 points. So you're going to start to lose your EMAs, depending how quickly this would happen, and you fall down. And 3,800 points from 38 gets you to about 34. There's really no support that I see. I think you end up at 30, 31K. And those are previous crash sites. Then you have to take into effect market panic, market sentiment. Do the bears take control? All these are unknowns. Nobody knows the answer to that. It's a very relevant point. Bullish scenario would be you defeat the 200, you defeat the 50, you're sitting at about 43K, death cross occurs, maybe you roll back 1,000 or 2 points because maybe most of that price declination is already built in and Bitcoin just consolidates and moves on. There's two possibilities here. But what I did want to show you, this strong white line I have going across my screen. The reason this white line is here is because people think we are trading at a new high. We are not. This has been part of the bear pennant, this high. Right there, we were fighting the 200 moving average, that same blue line, okay? If you look at that 200 moving average, what happened? We tried it a couple times. These are daily candles. We were rejected. We ended up down there. That's the 31K crash, 31,115, I believe. So history has a tendency to repeat itself, and I just wanted to make you aware of that. We've tested this resistance, and last time we tested it, we ended up at 31K. When you combine that with the potential death cross that looks imminent, I don't think you can power your way out of it because a 200 is such a lagging indicator. I think it's going to happen. It's just when it will happen. But when you combine some of these factors together, the danger here, whether you're bull or bear, the real and relevant danger is the death cross occurs, Bitcoin sitting at support, Bitcoin falls down. If Bitcoin falls down, it's a lot easier move to fall from 30K into the 20s based on action of price, based on all the factors, the mitigating factors, based on the fact that we are, regardless of this pump, still trading in a downtrend. Look at that descension in a bear pennant. Again, it's a bear pennant because we descended into it, right? So you have all these mitigating factors. It sets up a scenario which I have said for a couple of weeks now could propel Bitcoin to the low to mid 20s. Doesn't have to. There's money walls all over the place. You can't predict when buyers step in, but that is part of the prediction. Partly because we fell from the pennant twice now, and the width of that fall is the width of the widest part of the pennant, which would land you between 20 and 25 Bitcoin. And you combine that with the death cross, again, has never had a positive effect in the history of cryptocurrency. Every time it's occurred, there's been a negative effect. Every single time. So just keep that in mind. Why is this important? It's not to push a narrative, guys. It's important because you are traders. What do traders want? A new bottom, buy low. This is a potential entry point. Everybody should track the death cross, not because you want it to go one way or the other, because it is a valid and vital entry point if history and recent history repeats itself. Remember, Corona dump last year, price still went down 11% more. You want to look at things like this that affect the market. I do think that most people are not tracking this because many people in this space are new. Many people that are YouTubers that are very successful are very young. Some of them are 19 years old and they have hundreds of thousands of subscribers. They might not know about this. This is a financial instrument tool that came from the financial world that has made its way to crypto. So it's just something to keep an eye on. Read about it, educate yourself about it, learn about it. I'm not going to say love it, but good luck, everybody.